Hey everyone, Kevin here. So you might know me as that 28-year-old real estate investor and real estate broker who drives his Tesla Model X around with his face on it and helps you learn how to invest in real estate. Well, I also like to invest in stocks. And this morning I came across an article in Forbes which says Google could acquire Tesla for $1,500 per share, which would basically create a $2 trillion combined company. Now, ordinarily when I see headlines like this, I don't even click on them. But this one, I did click on, and I was blown away by the analysis. Now, I have to go into this saying, I wonder if some of this is just total speculation, or maybe all of it is, but it's a really interesting thought experiment to kind of go through. So I want to take you on the journey of this article because think for a moment. Tesla, the self-driving automaker that has revolutionized transportation already, basically with people sleeping behind the wheel and texting behind the wheel and having laptop stands in their car so they can edit Final Cut YouTube videos and Jeffree Star autopilots while putting makeup on. Let's just say Tesla has already transformed the highway as we know it. Some people are even filming YouTube videos holding microphones while the car drives itself on the highway going 80 miles an hour. Let's just say Tesla so far has changed the landscape of our highways. And we're just getting started. In fact, we're just now starting to see some Tesla semi-truck sightings on the actual freeways, which is also kind of cool. But we all already have a pretty sweet connection to Google. We use Google for search. A lot of us use Google for our email. A lot of us use Google for our calendar. A lot of us have Android phones. And Google also happens to be the owner of, well, where you're watching me on YouTube. So is it possible that these two companies, one that has reinvented our lives and one that is reinventing our lives, could merge and in an epic way 11x Tesla to speed up the production of Teslas and speed up the production of autonomous vehicles and basically make our lives better, safer, faster? Well, let's go into some of the analysis because this, I don't know, it could happen. I don't actually think Elon Musk would let it happen, but it's an interesting theory and it certainly makes a really cool case for Tesla stock. Or it's all speculative and you should just short the stock. Quick note, if you're interested in learning how to make more money, take a look at the programs linked below. There's a Valentine's Day coupon that expires in a few days, so you might want to take advantage of that and meet me in the personal finance course that comes out on the 15th. Maybe you want to meet me at a one-day in-person crash course in Vegas, or you want to join me in the online real estate investing course where you can learn, even if you have zero knowledge, how to make money buying below market value real estate so that you could buy yourself a Tesla. So the first position that this article attacks is it says Tesla's deliveries could scale up to 8 million cars if Tesla scales beyond the luxury market, which just for comparison, Volkswagen and Toyota deliver about 11 million cars per year, which is an incredible amount. But think about this. So right now, Tesla delivers around 500,000 cars per year, and this analysis believes that Tesla could increase their delivery of cars to over 2.7 million cars by 2025, and they could reach 8 million cars by 2030. And they believe that Tesla can do this as long as Tesla focuses on the space outside of the luxury market, which I personally believe the $39,900 Cybertruck is going to be an explosive hotcake, especially in areas like the Midwest. And I'm not just saying that. Based on some Google Trends analytics, you could see that interest in the Cybertruck is particularly hot, kind of where you would expect it to be hot, in the Midwest, which is really good because if the Midwest weren't interested in the Cybertruck, well, it might not bode so well for truck deliveries. But I think if Tesla continues to push the Model 3, introduces the Model Y, and the Cybertruck, forget about the X and the Roadster and the Model S for now, and with the opening of Tesla's factory outside of Berlin, Germany, this could happen. Now, initially I'm like, yeah, right, how are they gonna scale up to 8 million cars? I mean, I know in 2012 they produced 2,000 cars, now they're producing almost 400,000 cars and expected to be over 500,000 cars this year. And then the article clued me in. Wait a minute. Tesla opened an entire gigafactory dedicated to producing Teslas in 10 months. And that factory has the initial capacity of producing 250,000 cars. And once the factory gets fully up to speed, that factory could produce 500,000 cars per year. In other words, the authors of this article believe that if Google were to partner with Tesla, Tesla would have the cash injection to quickly pop up many multitudes of these gigafactories in these quick 10-month time frames, and all of a sudden, you could easily produce not 500,000 cars a year at one gigafactory, but 5 million cars at 10 gigafactories. In other words, right now, Tesla is in that sort of exponential growth phase. The only thing these authors believe that's constraining Tesla is a lack of cash. Now, I don't necessarily buy this part, but the next part of the article suggests that Tesla might actually sell their software as a service to other businesses. Because Tesla is so much further ahead of any other auto manufacturer in terms of millions of miles traveled using autopilot and collecting autonomous driving data, Tesla might be able to license out its software using Google's backing to companies like Mercedes, and Ford, and Volkswagen, and BMW, and all of a sudden, Tesla might generate $6,000 per self-driving sort of licensing fee to these other manufacturers using the data they already have, and then for every extra car they add, what happens? Tesla gets more data, and you get this like perpetual loop of Tesla becoming the biggest collector of autonomous driving data ever. And what does Google want more than anything? Data. Now, in the last video that I made on Tesla, a lot of folks were saying, well, Kevin, you know, we want to be careful not to value Tesla as a tech company. It's still a car company. But this article actually makes a very interesting counter argument to that. It says Tesla's net margins might be a lot higher than companies like BMW because Tesla could make money off its software business, increasing its valuation because it's able to not only sell cars, but also sell the software, possibly giving it a PE ratio of closer to 20, according to these authors, where most auto manufacturers sit closer to 10 to 12. They also remind us that regular car manufacturers have car dealers that eat substantially into the profits for each car that's produced, where Tesla is a direct-to-consumer company, where there is no car dealer. Which I guess now is a good a time as any to pull up my Tesla earnings spreadsheet and basically just play with the projections that this article just made and integrate them into the projections that I made from the last video that I made about Tesla. So in the last video I made, we came to this conclusion that by the end of 2022, it wouldn't be unreasonable for Tesla to be valued between $909 and $772. Now, it's kind of trading around those numbers now, but these are also based on selling 1 million cars at a profit of $56,300 per car with a margin of 22.5%. Let's now change this a little bit. Let's change this out to 2030 and see what happens. So 2030, let's go with 8 million cars. This is crazy. I feel like I'm projecting way too far out here. Let's keep the margin the way we had it. Let's go ahead and bump that to $20 billion. We had it at 5 billion, so that is a little bit up in the air. All right, and then let's take a PE ratio of 20. And then with a PE ratio of 20, rather than the 26 that I used before, Tesla at the end of 2030 could be worth somewhere around $8,000 a share. Now, in order for the stock price to go from $800 today to $8,000 10 years from now, Tesla would see a 26% return on their stock every single year compounded for the next 10 years. I don't know, that seems very fanboyish. Now, I mean, this is all a fancy thought experiment and all, but I have to say, you know, going through it now and looking at it, it does seem a little bit speculative. It's a very interesting concept. It could happen. I could see Tesla producing as many cars as Volkswagen and Toyota in the future. I don't see Tesla stock value going to zero, and I know we're going to see a lot of volatility in the Tesla stock, especially over the next 6 months. Now, as the short squeeze sort of continues, the price volatility is going to continue with its ups and downs. I'm still bullish on Tesla. I haven't sold a single Tesla share. I loaded up on some more Tesla in the 700s, and we'll see what happens. But I have to say, this is a really interesting idea, and I appreciate you watching this. Follow me on Instagram, and folks, let me know if you appreciate videos like this, and I'll be sure to bring you more of these anytime I see a neat article like that. Thanks so much for watching, and until next time.